This demonstration is designed to instruct you on using MetaStock software and accompanying plugins. It is not a recommendation to buy or sell exchange-traded instruments, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented should only be used by investors who are aware of the risk inherent in trading. Thomson Reuters shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company.
Good morning, good afternoon, good evening, whatever day it is, wherever you are in the world. I appreciate you coming here. I see many familiar names, and I'm very happy you attended. Today I'm going to talk about the Daily Sentiment Index. If you don't know the Daily Sentiment Index, I'll show you a little bit about it. If you don't know about me, I've been trading for 43 years, written about 45 books, and lectured extensively all over the world. I am a real trader, not a hypothetical or theoretical trader, by which I mean I really do trade. I trade practically every day. I teach what I trade, and I trade what I teach. Certainly, that's more than one book a year. That's correct. I have a lot to say. The good news is that it took me about 15 years to learn how to trade. The bad news is that it took me about 15 years to learn how to trade. Hopefully, I can cut some of that learning curve for you. So the bottom line, I don't have all the answers, and Daily Sentiment is only one of the tools that I use. I'd like to show you how to use it. But first I'd like to tell you a little bit about sentiment. We only have 1 hour. It's going to go quickly. If you have questions, I'll try to answer them. If not, you can email me with your questions. My email appears on the front slide over here down at the bottom. Or does it? It's jake@trade-futures.com, or you can go to my website and you can send me email from there. So, again, I want to thank MetaStock for giving me the opportunity to present the information on the Daily Sentiment. And let's talk a little bit about it. So, a couple of quotes to begin with, and one of them is that the dread of disaster makes everybody act in the very way that increases that disaster. We're talking about panic here, and panic feeds on itself. We have a similar situation going on right now in the gold market. Based on purely objective indicators, the gold market has been bullish for about 4 years. It's only now that many traders, especially small traders, are beginning to wake up to the idea that there's a bull market in gold. Where have they been for the last 4 years? Another thing that's no sound. Okay, does everyone hear me? Elias says there's no sound. Okay, everyone hears me. Okay, that's good, thank you. So the next item is something that Joe Granville told me many years ago when I presented some seminars with him. If it's obvious, then it's obviously wrong. There are many things going on in the markets right now that are very obvious, and people are making decisions based on what's obvious. Then the problem becomes, what do you do? Well, let me show you a couple of solutions, but before that, let me say this. Having traded for so many years, having lectured throughout the world, having taught hundreds of traders all over the world how to trade, I realized that one of the problems that is inherent in the world of trading is that people don't use objective information. They make decisions based on things that are mythical or mystical. They use words such as looks like, or might, or could, or my opinion is, or my analysis is, or my conclusion is. Trading has to be totally objective. Entry has to be totally objective. I believe that 1,000 traders looking at the same information without consulting with each other in 1,000 different locations throughout the world must reach the same conclusion if the work is to be good. Otherwise, it becomes interpretive, and interpretation is a function of how I feel. If I had a bad day, I'm going to interpret things differently than you. Then it becomes a game of emotion. So, there are, in my view, some very objective ways to use information. The market sentiment, or Daily Sentiment Index, is a measure of contrary opinion. Contrary opinion is a measure of emotion. In other words, we ask the question, what is the emotional state of the trader? If the emotional state of the trader measures fear and greed, which we know are two of the most powerful emotions in the markets, how do we measure those emotions? Is there an objective way? Is it true that when markets are extremely emotional, they tend to top or bottom? Is it true that the small trader is the most emotional of all the traders, and therefore the small trader is always wrong? Well, all of these things would be wonderful if they were true. But the bottom line is it's not that easy, and it's not that clear. We have the theory of contrary opinion, based on the idea that the majority is wrong most of the time. These are things that people have believed for a long time. We need to ask two questions. Number one, is it really true? Number two, is there a way to quantify it? Is there a way to look at it with numbers? I can look at a situation without numbers and say, yes, people are emotional. There's a bubble in the gold market. Someone else can look at the same situation and say, people are not emotional enough. There is no gold bubble. There is no bond bubble. So we need objective measures. I'm very big on objective measures because without objective measures, I respectfully submit to you we have nothing unless you're psychic. And if you're going to be a good psychic, you can trade well. But there are very few good psychics. In fact, I've never met any. So we have what's called the odd lot short sales theory. We have the commitment of traders report. We have the daily sentiment index. What are they? Well, odd lot short sales, I'll give you an example, and it's definitive. It's based on numbers. If it's based on numbers, we can work with it. We have the commitment of traders report, a wonderful report. That's the good news. The bad news is most people don't know how to use it. We've got the daily sentiment index, which we'll talk about today. The question is, do they work? We need to separate, differentiate between actual and anecdotal. Someone says, oh yes, I've been using the commitment of traders report for quite a few years and it's really helped me. How has it helped you? Well, gee, I don't know. I kind of look at a couple of moving averages, and then I look at the 120-day, and I look at the head and shoulders formations, and sometimes I look at a couple of candles, and then I kind of confirm it with the 30-minute chart. I look at the daily. The question is that repeatable? The answer is no. Most of the time, that person doesn't even know what they did. So we have to ask, how does sentiment fit into a trading model? Is there a structure that we can use? We have to ask, is the small trader always wrong? Is the large trader always right? So the key issue, what is the information and how do we use the information? Let's take a look at a couple of examples. I'm going to go to the next slide. And by the way, please do interrupt me at any time that you have a question. Let's talk about daily sentiment index. What is it? Daily sentiment index is an assessment every day in numbers of the percentage bullish or bearish response of small trader. So we ask the question, what is the small trader thinking? What is their opinion? Why do we want their opinion? Is it true that when the small trader is 90% bullish that the market is topping? 10% bullish, is the market bottoming? We can actually put it to numbers. Is it true that when the small trader is 90% bullish that the market is quote-unquote overbought? Okay. Advanced decline. Advanced decline is not necessarily a measure of contrary opinion. Okay. I hope everyone still has sound. Good. Okay, so what about oversold? These are not objective terms. If a market is 90% bullish on sentiment, is it overbought? Is it more overbought when it's 95? When it's 98% bullish, is it the most overbought? Again, we need to quantify, we need to measure, we need to know when to use them. So a couple of things, and I'll show you exactly what I mean. One of the things that we have learned is the large trader is not always right. Large traders do lose money. The small trader isn't always wrong. If the small trader was always wrong, they wouldn't play the game. I'm going to show you some clear and concise indications. I'm going to show you how it works, and I'm going to show you how we maximize profits Understand that in the course of 1 hour, I can't show you everything that I've learned in 43 years of trading. Maybe if I had 4 hours, I could do it. Because most of the time, I've spent unlearning things that are worthless and only using those precious few things that I believe are worthless. The poll is conducted, JP, the poll is conducted in a number of ways on the internet now. Small trader opinion only. And I'll show you what kind of information we get. And by the way, what's interesting about the Daily Sentiment Index is that the vast majority of traders who use the Daily Sentiment Index are hedge fund managers, top traders. The average trader is not interested in the sentiment because the average trader is too afraid to know what the sentiment is, because the average trader is usually the small trader, is part of the way the herd mentality works. Let me give you some examples. I'm going to go to the next slide. I'm going to skip these for just a few minutes and show you something. Let's go to odd lot short sales. This is a graph of odd lot short sales, and what it shows is this. On the top, we have the price of the S&P 500. On the bottom, in blue, we have odd lot short sales. What is odd lot short sales? Odd lot short sales is the aggregate number of short positions held by traders who do not trade a 100 share lot. It is presumed that the small trader can't afford to trade 100 shares, therefore they will trade 30 or 40 shares or 6 shares or 7 shares, and in that way we identify who the small trader is. We also know that the small trader doesn't usually go short. Therefore, using the theory of contrary opinion, if the small trader is very short the market, that would ordinarily be an indication of a market that's going higher. Later on, if you have access to the presentation, download the presentation and take a look and see how these points, extremes in odd lot short sales, correlate with lows in the market. Extreme in odd lot short sales over here, and a low in the market over here. Extreme in short sales, odd lot short sales over here, and a low in the market over here. Or extreme odd lot short sales here, and a low in the market over here. It's not perfect, and the reason it's not perfect is because we need to define what is a low. We need to know what a low is. How low is low? We can use a different measure, and that would be market sentiment. And let me show you what I mean. So let's just back up. Here we go. Here's a chart. It's a chart of crude oil prices. On the top, of course, is the price bars. On the bottom, we have daily sentiment. The daily sentiment moves from a low of 0 to a high of 100. When the sentiment is very high, and let me grab my tool here. When the sentiment is very high, in fact, let me grab my line tool. Just one moment, please. Just one moment. Hang on one second. Okay, here we go. When the sentiment was very high, which was right over here, we saw that price was at a high. For the duration of this move, the small trader sentiment was climbing, but the small trader in aggregate was not extremely bullish. It wasn't until we saw this huge near vertical run-up in prices that the small trader as a group says, "Oh my, it's a bull market. I am very bullish on this market." Well, lo and behold, that happens at about the same time as this top. The small trader is wrong. The market declines. It begins to decline slowly at first. The small trader becomes less bullish. Very close to the bottom of the move, when the acceleration of the decline becomes severe, the small trader